The market always dumps and it comes back, right? So it's just knowing what to do. Number one, stay calm, and then look for other ways to invest your money and make some money.
Hey, Colorado, Chris Lopez here with our monthly Fire on Fire podcast. So I got two firefighters who are also investors in real estate. You guys probably know Paul and Jamin around the podcast around town. Good to have you guys back on the show.
Good to be back, Chris.
It's great to be here.
Yeah, and so we're going to be talking lots of stuff today. We are recording this April 7th, so the stock market has dropped off quite a bit the last few days since some tariff announcements. And what we want to talk about, though, is obviously not tariffs and stock markets, but how is that impacting real estate? Now, Paul and Jamin both have quite a few deals as agents around town. They're going to share some commentary on what they're seeing in the market, on what prices are doing, certain asset classes. We'll be talking about market conditions and what makes the most sense in times like this.
Yeah, I mean, going back, let's just discuss where we are at the market right now. I mean, we can't ignore that, obviously, and I think that's at the top of everyone's minds right now is what do I do? Where do I go? First off, I know, don't panic. So let me take a drink after I say that. Because that helps.
You were just looking at your stocks.
Yes. Yeah, it's painful. And, you know, this has happened before. Everyone's been through it, you know, especially looking back at COVID, 2008. The market always dumps and it comes back, right? So it's just knowing what to do. Number one, stay calm, and then look for other ways to invest your money and make some money. And I think there's a lot of opportunities still in the market right now. You know, especially the real estate market, alternative investments. So that's what, you know, we're going to talk about today, seeing what we've seen. There's real estate still doing really well, especially in the Denver market. We haven't seen the drops that some states have seen, so we're holding strong still. Supplies increasing. I think the days on the market have increased as well, but not as bad as the rest of the market. But I don't know if you're seeing the same thing, but I'm still seeing some buyers out there with a lot of interest. There's just a lot of scared people right now. And there's some experience in that.
I think that the houses that are selling well are they're fixed up and updated, clean, and then everybody else is kind of struggling.
Well, actually, I'll take a step back from there. Even before that, I think, you know, we all know the adage, location. I think location is having the biggest, that's where I've seen the biggest delta, location and asset class type. It's been, you know, hot locations, or, you know, Class A type locations. Those are staying strong. They're oftentimes getting multiple offers, though, or multiple offers still. And then, you know, single family homes versus condos, night and day difference. Single family homes are still appreciating. Condos have, I mean, they have knocked off, depending on the market, 5 to 15% since the peak a couple years ago.
Yeah, and I think part of the problem on that is HOAs play a part of that. It's not the whole problem, but it's a big part. And I guess I would talk about somebody I know just got a letter from their HOA saying that their HOA was not going to be putting 10% into the reserves, which means they can't get a loan per Fannie Mae and Freddie Mac.
So that means they're having no reserves.
They'll have reserves, but they're not putting the full 10%, which is the requirement for Fannie Mae and Freddie Mac.
So they're getting below that 10% threshold.
Correct.
And this was that complex you were sharing about in the Springs, right?
This is in the Springs, yep. It's a townhome complex. It's in a decent area. It's over by the Broadmoor, and but they're not putting that 10% into reserves, which means they can't get a loan. So it's a cash only deal. We'll see what happens with prices.
Yeah, I've seen a couple of, you know, I've had personally a couple condos listed, and, you know, talking about HOAs, I think people are paying a lot more attention to HOAs than they ever have, especially the financials. People want to make sure, especially nowadays with insurance rates going up, that these HOAs are solvent. And people are looking at before you'd get all the HOA documents, that stack of CC&Rs and minutes and financials. No one hardly ever looked at those, but I'm really seeing that the due diligence that people are doing on these HOAs has increased significantly.
Yeah,
and
I'm ordering them ahead of time before we list, because I need to make sure that we can sell it.
Yeah, absolutely. And having a condo right now, one over in Meridian Villas area, right.
And this is when you're listing, right?
Yeah, I've got that listed. It's been listed for about a little over 30 days. We've had a couple of offers come in, and we were at the point where we were negotiating over the phone, talking about terms. and getting ready to submit a counteroffer, and suddenly they're withdrawn and walking away. Now, there is a little bit of an issue in there. There's, as soon as we listed, 5 others came on the market at the same time, almost identical floor plans and size. A couple of them were a little bit bigger. Those with the one that was most expensive went under contract, and the one that was least expensive went under contract. There's 2 in the middle that are exactly the same price, and we're getting showings, but people have got some cold feet and they're asking a lot of questions.
So what part of town is this?
Basically Lincoln and I-25, the Meridian.
Okay,
yeah.
Okay, and then how big is the condo? Is it a decent sized condo
it's
complex?
about a little over 1,000 square feet.
No, I'm saying how many? 100, 200 units?
I would say it's about 200 units.
Okay, so it's a big size condo. Yeah. So talk more about that, because you've had offers come in, and have you been in a contract on this place yet?
No, we have not. Well, we got close. We were to the submitting a counter, and then suddenly they're pulling away. One excuse was that they weren't able to go under contract because where they were leasing at would not allow them to escape the lease they were in. And then another time was we went forward. We were just about ready to sign the contract. They found a different place that they were more, I think, could negotiate better terms on, and went with that contract instead.
And what's the price point of this?
We're at $370 right now.
Okay, so this is like a Class B plus or Class A minus?
I would say Class B plus.
Okay.
Definitely nice area, nice condo.
That's a great part of town.
Yeah, it's very clean. It's got a garage, and it's a great area because you're around all those amenities that you got in that area. So you think you're close to everything. So great for people working in that DTC area. So it's kind of interesting. And a counter to that is a house that I listed in Cherry Knolls, and it went under contract in a day. Multiple offers, about 15 to 20 showings.
And so in that first 24 hours on that house in Cherry Knolls, what was the price point and how many showings?
So price point is $875. We had about anywhere between 15 and 20 showings.
In that first 24 hours?
Yeah.
Wow.
Listed. Yeah. As soon as it went on the market, we were just getting phone calls left and right. Most of the people were aware that there was going to be multiple offers and said, you know what, I'm not even going to show it because it's going to go under contract probably over list price and my buyers aren't there. So that's, two contrasting areas, right?
But that really shows the market right now, the asset class between condos and homes.
Right.
But also location,
homes.
Right?
Yeah.
Like you talked about earlier, Littleton, I had the same thing. Lots of showings, went under contract quick, terminated. The buyers terminated. I was listing it, and then within a day we were back under contract. And I have one in Castle Rock. It's just slow.
Are both these single family homes?
Yep.
Okay. So Paul, on the first day of the condo, how many showings did you have in the first 24 hours?
I had about 5 or 6.
It's actually better than I thought.
Yeah, it was good. We had a good decent amount. And then as soon as what's nice is I guess we get all the showing traffic that everybody wants to see every place in there. So the agent will book 5 showings.
Oh, all in the same complex?
Yeah, all the same place. So, we're trying to match this condo that's exactly like ours. They lowered their price. We were at $375. They dropped their price. We dropped their price to match them. And I'm assuming that's what's going to happen again here pretty shortly. But you're seeing the price decreases happen pretty rapidly. They happened right away. A lot of them in there were listed pretty high, and they rapidly dropped. So they were above 4, a couple of them, and dropped down to 380, and they went under contract immediately.
Okay.
Yeah.
And then, Jamin, you said the place in Littleton got a lot of traction, but Castle Rock did not?
Yeah, the first weekend we had, I think, 9 or 10 showings. Went under contract pretty quick. And then, obviously, the buyers terminated because of inspection and dispute, but we were back under contract.
Did they give you any real inspection objections, or they just terminated?
There were some inspection objections.
Okay.
And it was, I'll be honest, it was about, it has 2 furnaces. Both were working. We had them, because they always come up inspection if they're older. So we had them serviced, cleaned, and they were both in good working order, but they wanted more money than what it was going to cost to get it done. And we couldn't come to an agreement, so it terminated.
It terminated with a furnace inspection?
It terminated over...
There had to be more to it than that, right?
It terminated over $1,500.
That is frustrating.
Yep. And we were doing everything. We were going to replace the furnace, and they wanted the money instead of having it replaced. So that terminated, but within 12 hours, maybe 15 hours, we were back under contract. Just closed on that, and then we're under contract in
So the Littleton place closed.
Littleton place closed.
Above or below list?
Right at list.
Okay.
And then Castle Rock took a little bit longer, about the same price range. And we're under contract now, and we're going through inspection. We'll see what happens.
See, that's interesting. You talk about like location. Like I don't know the Castle Rock market very much, other than like I go to downtown Castle Rock 2 or 3 times a year. I think it's an amazing place, but I don't know the market down there like I do.
Sure.
True Denver metro. And you think Castle Rock has that softened more than a lot of like Littleton, other parts of Denver?
I don't know if I know the market as well enough to say if it's softened. There's some people out there that probably specialize in that area,
Yeah.
and would know better than I would. I just was blown away. I mean, it's a nice house, 3-car garage. It's 2,200 square feet up with 700 square feet down. It's on 11,000 square foot lot in a quiet neighborhood, and it just was slow. I think we got 5 or 6 showings the first weekend, and then I kind of think the trend is and what we're seeing is maybe after the first weekend it goes on the market, we see about 1 to 2 showings a week. Just they kind of drizzle in.
Yeah. Yeah, it's funny. I was looking at, I've been reading a lot. I like to keep on the market and see what people are looking at. And depending on what information you're looking at, you can look at like Redfin and Zillow, and you kind of get an insight to where people are either, maybe it's their dreams, but Redfin's a perfect example of like, we have a outward migration from Colorado that was in the 32% range that were moving out of Colorado. So this is just kind of, what Redfin, what they're looking at, where they're looking from and where they're looking at to moving. And they showed that there's a migration out of, which is pretty significant, 30%.
30% of like not total population, or is it
No. This is
like inbound to outbound. It's a 30% difference.
Yeah. So yeah, there's people. I mean, Redfin just looks like where are people searching from where they're currently living at, and where are they looking. Phoenix was a big market, and Colorado Springs was another one. So it was local, but they're moving out of Denver. It's an expense thing, right? So people are looking for affordability.
It's also a quality of life. Have you been downtown Springs versus downtown Denver?
Yeah.
Which one do you want to take your
yeah, absolutely.
kids to?
Well, that's where my Littleton people went. They sold in Littleton and then went and paid cash in just outside of Phoenix.
Really? So they took their Denver equity proceeds and went out there and bought a house all cash. Yep. What did they sell the Littleton place for? What did they buy in Arizona?
Honestly, I don't know the number that they paid.
Or like rough estimates.
They're right around $500,000 is what they paid for their house in Phoenix, and they sold for $649,000.
Wow, good for them.
Yeah.
Okay, so are they retiring down there?
Yeah, they're retiring down there.
Okay.
Yeah.
Now, what about the other properties? You mentioned you have a condo and the place in Cherry Knolls. Are those rentals, primaries? What are those, Paul?
Yeah, so one's a primary. The other the condo's a rental.
Okay.
The single family is a primary. They're moving to Florida, so they're getting ready to sell. Another interesting thing on the Cherry Knolls primary residence, the offers that were coming in, it was kind of interesting to see that a lot of the 4 offers that we got, 3 of them were cash. And the conventional loan one we got was a significant amount of money down. Now, a lot of people, those cash offers were bridge loans. And a lot of these people had not had their house listed yet. But they were going to get it listed. They were confident enough. And it was in the same neighborhood, which was real interesting as well. Everybody that had their house that was putting an offer in had a house in the neighborhood similar. But they were looking for a different floor plan. So this is a ranch. So there were older people that were looking, and they were downsizing a little bit. They had some bigger houses, and they were willing to use the bridge loan because they knew that area was very hot and they felt very comfortable with being able to sell it very rapidly. And they went under contract pretty quick on their houses, but they utilized a bridge loan to make a more aggressive offer on the house. This house I'm listing right now, they knew they were going to have to compete. So, it's so low, real estate so local. So that market is still much like the 2020 2021 market, where there's multiple offers, people are using cash and whatever they can. There was an appraisal gap, there's an inspection clause on all the offers, so that was interesting to see because I hadn't seen
what a night and day difference between that and a condo.
Yeah. Absolutely.
And kind of going back to, so I'm rewinding the transcript here a few minutes, Jim, but you're talking about location and like, Littleton to Castle Rock. I think they're both like amazing places to live. I was thinking more like Littleton versus like East Colfax, right? Or other parts like that where it's like.
I've got a house in Denver right now. First time home buyer, bought in 2022, and he had a life change and got a job in Florida. So he's down working in Florida. So we've got his house listed, and he's going to have to come to the table with $20,000.
So
just because the market changed between 2022 and now.
And he kind of bought towards the top.
Yep.
Now selling, they're not during ideal conditions. What was you said it was in Denver? What location? Like what submarket?
Oh, close to Ruby Hill. How about that?
Okay.
Yeah.
That works. Yeah.
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 So what other trends you guys seeing out there? I mean, you talk to buyers and sellers, you talk to other agents. What's the sentiment out there right now in just the Denver real estate market? You got primary owners, you got landlords, and you guys have a good mixture of both. What are people saying, or what are they feeling?
Where's the market going? Obviously, I wish I had a crystal ball to be able to.
We all do.
Honestly, tell them where I think it's going, but that's people are worried right now. Can I sell my house for what it was going for in 2021, 2022? No, you're not going to get multiple offers, most likely. We felt like that house in Cherry Knolls that we were going to get a lot of showings. I didn't think the buyer purchasing power was going to be as strong as it was. But there was, like I said, the cash offers, everything, up to $25,000 over list price. We're not seeing the $100,000 over list price, which that house listed 2021, 2022 would be going for $100,000 over list price probably.
Yep.
So there's some good, everywhere's kind of taking the hit a little bit. Obviously interest rates are still holding strong. People, that's the other question. The sentiment is like, do you think interest rates are going to drop? Should I buy now or should I wait? And of course my answer always is buy now. Just don't wait for interest rates to drop. You can't predict that. Buy now or buy yesterday. And that's a saying in real estate, right? When should I buy? Yesterday. So that's the sentiment out there. That's the biggest concern. People are worried about where interest rates are going to go. Is the market going to slow down? Am I going to lose money on this investment?
So something that I've seen is that with like I'll say the nicer houses or nice locations, you get to a certain price point, those buyers are a lot less sensitive to interest rates than, buyers in the sub $1 million range or so. Yeah, maybe absolutely. Sub 900, sub 800,000, but sub $1 million for easy. But you get over $1 million, especially $1.5 million, it's a different ball game out there.
Yeah.
Now they're doing jumbo loans. They may do all cash or some collateralized all cash, bridge loan they may be doing. But the higher in the market has a lot less sensitivity to interest rates than a lot of the properties we're talking about now.
Yeah, they're able to deal with the cash. They've got the cash, right?
They usually got assets they're borrowing against. They got a bunch of stocks or a business they're borrowing against to go buy their $2 million or $3 million home in Bonnie Bray.
Yeah, you've actually seen an increase in that for sure. That market has not been hit. I'm glad you mentioned that because that price range we started at 875 and we're over 9 now on offers. So yeah, it's doing very well, and that was a perfect example of people with some money. They're just not hitting them as hard as other people. So,
and I think a good example, I'd seen a statistic or read a statistic, I can't remember where, but it was over 50% of homes or the offers coming in for homes on the market had some sort of concession, right? And so when you talk to people that are in that 1 million plus market that are selling, the concessions are zero, either no concession or they're very little, versus someone who's like that $400,000 to $800,000 where you're seeing $14,000-$15,000 concessions for whatever reason, a buy down or closing costs or whatever, right? Because they're bringing their entire life savings to the table.
Yeah.
So Paul, I got a random question for you. How is your project doing? We did a podcast on here 2 months ago or so.
Yeah, so we are actually, we have the forms up. We ran into a little bit of another issue was that the house only had about a foot of foundation on it when they originally built it in the 1900s. So it was all built on brick and it was only about a foot down. So when the engineer got out there, he said, you've got to put some footers down here and build supports around the back and the sides of the houses. It was almost going to have to be around the whole house. But the engineer's like, I don't think we need to do that. Initially, his thoughts were, yes, the whole house. Now it was just the back and about, I'd say, a quarter away on the side of the house. There needs to be concrete put in to support the house.
So when they do that, are they putting out like underneath, or is it farther out and then supporting it that way?
Yeah, it's going underneath. So what they did, they dug out the dirt underneath the back of the house. There had to be done in sections because they worried about the house falling in. So that was another big hit. Was like, okay, that's going to be another $100,000 easily.
So this was not in the budget.
No, not at all. Yeah, that's on top of the asbestos that wasn't in the budget, all of the affordable housing fees that wasn't in the budget, the sidewalk that wasn't in the budget. So yes, you have to really do your homework, and for the foundation, I mean, you're just not going to know that until you get into it.
Yeah.
And start doing the work. So yes, there are surprises, but we do have all the forms up, the pouring concrete today for the foundation, for the rest, the second part of the house, the back part. So it's moving along. I think we've got some more surprises on the way, but we'll just see what happens.
Did you guys ever look at the cost difference between scraping it?
We did, and our big thing was preserving the front of that house, and we felt that it was more unique to the neighborhood. I mean, keeping the nostalgia there, I think a lot of people like that.
That has some value.
Yeah, there's so many modernized homes there in that neighborhood. I think it'll be, once it's done, we still have those margins there. Maybe it's not going to be as good as we thought it was, but we're still going to be okay.
But you got to still be profitable, right?
Yeah. Yes. Yeah.
But
so that's what's important.
Something you got to build into any plan or any project, right?
Yes.
The unknown.
Yeah, you got to have well, this one would have been way over what you're typically supposed to build into for overages. So, but we did buy it good. That was the one saving grace here, is that we were able to get in a low price point on the property. And we sat on it for a couple of years doing all the planning and everything and getting through that. But I think by the time we're done, we should be in a good place.
And they're going to be selling it, what, in that $2.5-3 million range?
A little over, probably the 2.5, in between there. Hope, fingers crossed, as long as everything holds
together. Nice thing, hopefully, I mean, assuming the market looks similar to today, like you're delivering into a very strong like buyer pool in that price range. As you talked about, like they're looking for very different and a lot of sense of interest rates than someone buying a $700,000 house in Littleton.
Yeah, people buying in that price range don't care about interest rates too much. They've got the money. If they're buying in that range, they just want to pick the place they want to live in, and they're okay with everything else.
So the reasons your sellers are selling, not just on those handful of properties we talked about, but just in general, how many are primary and how many are investors? You guys like 50-50?
Yes. Yeah. 50-50.
Okay. About 50% investors, percent primaries. So for the investors, why are they selling and what are they doing with the proceeds?
Good question. And that's funny. That's the first question these people came to me with when they thought about selling their rentals. I've been investing in a bunch of alternative investments outside in real estate, syndications, and really get into that myself. And we've been talking about that a lot in our podcasts about, what else is there in the market right now that's cash flowing and can give you back a decent return. So, these syndications is what I've been going into, and the investor that is selling one of his rentals and probably another one, he's doing exactly that. He's getting into these outside investments that are developments mostly, and some debt funds that people are getting into because they're cash flowing. It doesn't make sense to do a 1031 exchange and do another rental and go through that process. That's not working at all right now. So the first question is, what options do I have other than it's either cash out, pay the taxes, and take the money, or try to find something to reinvest that into, that's not a 1031, but you're going to pay your taxes. But how do I make that money back when I pay my taxes?
So none of your investors are doing 1031s right now?
No.
Okay.
No. And that's the interesting, that was the way things went before, right? He sold something and went to the next thing and kept going up and up, but that's still not making sense right now.
That's the trend I've seen too with a lot of my clients and a lot of deals we still do. It's, I can't think of anyone in the last year that's done 1031 exchange off the top of my head.
Yeah.
Most are just cashing out and redeploying into alternative investments, or just cashing out and stock market, or doing whatever with.
Yeah, once you sit down and run the numbers, which I've done, and I'm doing it myself. I'm selling a triple net, and I'm done with my 1031s. I'm not going to do a 1031. It just doesn't make sense. I need the cash flow. I'm in retirement, so that's what I'm looking for right now is cash flow. So I'm going to get away from the 1031 and potentially go into a QOZ. You've been talking about that a lot. If you guys are interested, look back on the podcast and you can learn a lot about QOZ developments and a lot of different ways to, once you pay those taxes, how do you make that money back, right? What's going to work for me the hardest and get that return on investment? And, in a couple of years, you're back to where you were. And so that's what I'm looking for right now, because, I've looked at all the options out there and it doesn't work for me. And I think that's the sentiment with a lot of people that are investors right now is where do I go? And a lot of people just don't know about what else is out there. Is debt funds and all these development funds. There's a lot of opportunities out there that will give you a great return and a safe place to there's risk obviously, but I think it's safer than doing a 1031 right now, risking losing return.
And I think our investors they know that being a landlord's work, right? And so on top of managing tenants and rents, and the other thing they got to deal with is new legislation, right? And so that's what's hitting people, and people are afraid of what's going to happen in the future. So they're like, I got to come up with an exit plan, and how does that work? And that's what we're talking about right now.
Yeah, exactly.
Or have been talking about for months.
Yep. Looking for ways and different ways to get in, and that's what we're talking about now. I mean, that's the first thing I'm telling people is like, you can look at a 1031, but you're going to see the difference in what you're going to be getting back in money. I don't think you're going to find it very attractive.
Yep.
So
with your primary, because are most of your listings primary or investors? What's your ratio?
Mine are right now. Mine are all primary.
Okay.
Yeah, but we, like the house that's in Ruby Hill, we looked at those options. So when we looked at market rents in that area, he wasn't gonna. And again, he bought in 2022, but he wasn't going to cash flow. He was going to actually end up, it was going to be money out of his pocket. So he when I told him he was going to have to come to the table with some money, he was like, it's worth it to get it off the table right now. Just get it off.
Which, I mean, like it sucks to lose money, but like that is the right attitude.
Yeah.
And like, especially, $20,000, that's not $200,000.
Mm-hmm.
And you said he's already living in Florida, right? So his life has moved on. Hey, take your chips off the table or take less chips off the table, then move on. And hopefully, since Florida prices have dropped a lot, hopefully karma is helping him out with the stuff he's getting down there.
Yeah.
So hopefully it's helping down there.
Yeah. He's all for it. He's like, I understand it. I'm cutting my losses, and he'll make that up. We're in the price point is that mid 400s, but he'll make that up in a couple months without having to pay that mortgage.
Yeah.
So
right decision. I mean, no one likes to lose money, but hey, we all have deals that don't go as we have planned.
Yeah.
So, Jamin, part of what we're doing here on Fire and Fire is you're our in-house bourbon connoisseur, right? And my glass is empty. That's why I was asking up. So I'm going to pour something on here. So you tell everyone what we're drinking here, or what I'm drinking here, because you chose this.
I didn't choose it. Paul did, but
someone chose it, and I'm drinking it. So we'll say that.
I just closed my eyes and pulled it off the shelf.
McKenna 10. It's a great bourbon. Used to be at a great price point. But I think the market for bourbon is starting to settle out a little bit. You can still get it on the shelf. Actually, you can get it on the shelf now. And then I'm drinking Weller Special Reserve, which is a good bourbon by Buffalo Trace, and it's used to be $28. You can get it for like between 30 and 50, and they're good pours. They're good drinks.
How do you think real quick, I mean, we might go down a rabbit hole here, but how is tariffs affecting bourbon? I mean, where do you think that's going to have to do to the bourbon market and whiskey?
I don't know. Hopefully they got smart people working for them that can figure out that. I just drink it. That's all I do.
Yeah. There's a great segment on 60 Minutes last night on Bardstown. They talk about how they, make the barrels and, where they ship it to now. There's a really special bottle out right now that they make the barrels here and then ship it over to Europe somewhere. I think maybe it's India. and they put the ingredients in, then they ship it back, and they can still.
India's not in Europe, right? I think you misspoke there.
I said, well, I mean Europe, but
It's
India,
the bourbon.
Yeah, I think it was India. I wasn't sure if it was Europe or, but yeah, they're shipping it over. They're putting the ingredients in, and then shipping it back so they can still call it bourbon.
Oh, they're shipping an empty barrel,
Filling
it up, and then shipping a full barrel back.
Yeah, the ingredients are coming from over there, and then they're shipping it back. So, it's pretty interesting.
The only thing I know about how the tariffs affect the bourbon is that there's more stock on the shelf and more availability. So I'm okay with it.
We're not seeing prices come down though, are we?
I think we're starting to see prices. It's a combination of things, but you're starting to see retail prices come down as well, more back to normal, and you're starting to see secondary market prices come down too.
Secondary market prices for bourbon. That sounds like a whole other podcast there.
It is.
A world I'm not smart enough in. All right. Well, thank you for bringing this stuff, by the way, Jamin. But moving on to some other topics. I know we've been talking a lot, especially the last couple months, about self-directed IRAs / self-directed 401ks. So, self-directed retirement accounts.
Yeah.
I think it's been partly where people have not, they have a lot of cash or investments sitting in an old 401k or an old IRA. And then I think the stock market volatility, uncertainty has obviously made a lot of people want to diverse away from the stock market. I've seen that with a lot of my friends and clients. Have you guys seen that with the people you work with?
I haven't personally seen any, but just working with you guys, it's been a topic of conversation in the diversification. And to be honest with you, before probably 3 or 4 months ago, I didn't know anything about self-directed IRAs. And so I think it's an interesting concept, and the ability to use it for real estate, which allows you to diversify, especially in a market where we're at. The stock market right now is, taking a dip, and it just more well-rounded, and the ability to use that and make money on it, right?
Yeah, I think there's a lot of options. So the thing that I hear the most is, first of all, what is a self-directed IRA?
Sure.
Isn't that just a regular IRA? What's so special about it? The difference between an IRA and a self-directed IRA is that a self-directed IRA, you can purchase alternative investments such as precious metals, cryptocurrencies, real estate, but it has to go through a third-party custodian. So you have to have all that money needs to come and go do the custodian. It can't touch your hands, and then it's tax-free. So when that money coming back in goes back into your self-directed IRA, and that's tax-free money. So that's a big difference. And I don't think a lot of people realize that they can have an IRA where they can go out and purchase real estate. So that's the benefits. When people understand that, they're like, oh, wow, I can use an IRA to buy real estate. That's a great option, especially with the tax benefits. It's great.
Now, weren't you setting up a self-directed IRA, Paul?
Yes.
Or you mentioned that, right?
Yeah.
Are you still in the planning stages?
Yeah, still in the planning stage.
Okay.
Yeah, figuring out, I just got to pull the trigger here, and I've been looking at different companies, and you got to look at the fees and everything, and compare and contrast which one best fits you, and every company's a little bit different, so you just want to make sure you do your research on that, which I've been doing right now. So I don't know when I'm going to pull the trigger on it, but pretty soon. Yeah,
so a little over a year ago now. Yeah, a year ago and a few months ago. I did a webinar, just kind of reran it a few weeks ago with all the market volatility. But I moved over about $300,000 from the stock market towards real estate. I think I did that in January, February of last year, which I think is kind of where stock prices are hovering at now, about this time last year when I looked at the S&P 500 chart. So I'm a huge fan. I've been investing in a self-directed 401k for 4 or 5 years now. Absolutely love it. And then about a year ago, I wanted to move some money from the stock market more into real estate. Partly was I did not understand, the valuation of the stock market. I thought it was getting a little frothy. And then secondly, I spend 100 hours a week doing real estate. I have a competitive advantage in real estate with deals I see, people I know, and knowing market trends. Where when I used to have, I had no competitive advantage in the stock market, other than index funds, or I was telling you, Jimmy, 15 years ago, I did some day trading, and that's ultimately one of the things that led me into getting into real estate investing, because I could not day trade profitably. I said real estate should be easier for me, and it has been so far, last, decade plus. But But I've been very happy with moving the money over because A, I got control. But B, I've just been happy with how like the macroeconomics have played out, where I've been able to take some money from the stock market where I sold at a relatively high price and moved over and gotten some really good real estate deals, especially some commercial real estate deals where prices have been, on the lower side the last couple of years. And I've been very happy with that transition, like making over. So if anyone's interested in learning about this, let me know, let Jamin know, let Paul know. It's a fantastic way to go out there and be able to diversify some of your retirement accounts. Of course, always go out there and talk to your financial planner or CPA, make sure you're making a smart move out there for you. But I've personally been thrilled with setting one up about 5 years ago. And then the biggest thing for me was I was always the mindset, once money's in the stock or once money in the real estate, it will never leave that asset class. Hey, stocks stay stocks forever. Real estate stays real estate forever. And that year ago, I started having to take some stock money and move over to real estate, which was a huge mental hurdle for me. And I actually lost a lot. I didn't lose sleep, but I had a few nights, laying awake at night saying, hey, should I do this? Should I not? Because my programming was don't do this, right? Just stay in the stock market forever. And I definitely had some, worry and stress about it. But I am, especially after the last couple of weeks, I have been thrilled with that decision.
Yeah. I agree. I mean, everything I've read and everything I learned was like, once you're in the stock market, don't pull out of the stock market. Stay in the stock market, stay in real estate, wherever it is, don't move around. And I did the same thing. I pulled out a lot of money out of the stock market and invested in some of these development funds. And I'm very happy I did. I was same thing with you, like you. I lost some sleep and wasn't sure if I should do it. But right now, looking back, especially today, looking at the market, boy, I'm sure glad I did that, because I took some money off the table and I put it in an asset where I'm still making a healthy return right now instead of losing money. Now, I still got a good chunk in the market, but you know what? I'm just going to sit on that. I'm not having to withdraw it because of my real estate. I'm able to pull in a good passive income that I'm able to live off of without having to touch my retirement. And that's super important to be thinking about in these times when the market goes down, and it always will go down and it will always come back.
And I think this is one of I always look at things as, it's pros and cons. One of the cons of investing in syndications and passive real estate and real estate in general is it's illiquid, right?
Yeah.
It's high transaction costs, and sometimes you just can't sell your position or sell your asset without taking a loss. You have to wait a while. But in times like this, where the stock market, man, minute by minute, it's a roller coaster. You don't have those public market updates like you do in private equity or passive real estate, where you really don't know day to day how the market is evaluating it. So you don't have that roller coaster effect. Oh my gosh, I'm down 10% today, up 10%, down 10%. So while being illiquid, is usually a con, a pro in my mind as well is you're less sensitive to headline news because there's nothing you can do about it, and the market's not transacting in real time. How much is this asset that Jamin or Paul or Chris is worth at this moment at 12:11 on Monday afternoon?
Yeah. I'm not having those wild swings like the stock market, right? My real estate is staying pretty consistent right now, and my returns are pretty consistent. I'm not having that indigestion looking at the market every day going, oh my God. So, I'm not looking at it every day because I don't want to go crazy. But I do know I have a decent return coming in from alternative investments that I went into a long time ago.
Yeah, and I think we see that at the firehouse table with firefighters that are real close to retirement, right? That stresses them out.
Yes.
Yeah, watching that market.
They're going to stay a little bit. They're going to change their plans. Inevitably, I've seen it before, and I think this is in every industry, not just firefighters, but people are getting ready to retire in a couple of years, and they're like, I just lost $200,000, $300,000. I need to make that money back before I leave.
Yeah.
Which is that mentality is, that's warranted. But at the same time, your life is your life. You want to be able to enjoy it and get out there. And, that's another reason to invest in real estate. So you're not just dependent on one thing that's fluctuating like crazy and you never know what's going to happen when you retire. But real estate, you have a pretty good idea where that's going to be when you're walking out the door.
So, not real estate question for you guys. Did either of you guys buy while the stock market's been going down the last few days?
Yep.
Yeah. So you bought on the dip or the crash, wherever we're in?
So I'm doing dollar cost averaging right now. I'm just putting in money monthly now. I just started that because now is the time, like people in the fire department right now, this is the time to start putting in more money into your 457s max out everything, match and exceed that. If there's an outside investment that you have, start doing dollar cost averaging. Let's say if you don't have that much money, $100, $200 on a regular automatic basis coming out of your account, going into the stock market, you're buying stocks are on sale right now. That's the way I'm looking at it. Buy them cheap because guess what? Everything's going to go back up and you're going to profit from that. So this is the best time to put more money in or get into the market or just put more money into what you're currently doing right now.
Keep contributing.
Yep.
Yeah. So both of you guys just keep contributing.
Yes.
Dollar cost average in, buy on the dip or correction or wherever we're in.
I had stopped because the market was so high and I knew it was pretty frothy. I knew something was coming. No one knew when, but we know now. So yeah, that now's the time. I'm like, okay, well, I know it feels horrible, but I'm putting money in because I know. I look at 2008. I look at all the way back to 1930. You go to 2008. You go to COVID. If I had put more money in it at that time, I learned from my lessons. Invest at the low points, and your money's going to go.
Yeah, and I always go back to Warren Buffett and the quote where he says, "Be fearful when others are greedy, right? And be greedy when others are fearful."
Yes.
Cool. All right, gentlemen. Well, I'm looking at my agenda here. We got everything crossed off, at least on my agenda. Any other topics or current events you guys want to chat about before you sign off here for the day?
Well, I'd like to, Jamin and I and Chris, we're all talking about putting some classes together, and we're trying to get that on the schedule so we can start talking about issues like we've been talking about today and where we can invest. And that's what we really are getting out there. This whole fire and fire education process is all about. It's all free. Come out and pick our brains, learn from us. We're actively investing right now. I'm invested. I don't encourage anybody to invest in stuff that I'm not invested in myself. And that's what I'm doing right now. It's working for me, so you can get firsthand knowledge and information from what I'm doing. I'll let you see what I'm doing, what my returns are. I'll let you see the checks that are coming in from the investments that I've made. So come in and learn about that. And so we're putting these classes on for free. You can ask anything you want to ask. If you got properties, we can put them into the property law evaluation tool. We can talk about what the next steps are if you're interested in selling.
Yeah, and I would just add on to that these podcasts are for everybody. And I would tell you that 5 years ago, a year ago, I wouldn't have known about QOZs. I didn't know about self-directed IRAs. I only knew what I was taught growing up and then what you hear at the firehouse table, right? And there's options out there. So use these podcasts and increase your knowledge and
pick our brains.
Yeah,
use
pick our brains.
Use us.
Yeah.
Love it. Well, cheers, guys, on the great podcast.
Yeah.
Cheers.
We'll be back here next month. If anyone has any questions, let us know. Happy to sit down and have a conversation, look at your portfolio, give you ideas, but here to be a resource.
Yep.
So cheers, guys.
Thanks, Chris.
Thank you.